can share your screen as well.
Alright. Thank you very much for this opportunity. Thank you for believing in us.
This call is now being recorded.
Um, Starting my presentation right away. Thank you so much, sir, for believing in us. Thank you, Mr. Peter. Thank you, Madam Ekwi. These people have really done a lot in my life, so I can't do any presentation without talking about them. And thank you, HFM, as well. Let me go straight to the presentation. Before I proceed, I want to be sure you are seeing my screen. Please, can you all see my screen?
Yes. Okay.
Right. Thank you very much for that. Before I dive in to the SMA strategy or the SMA trading strategy, I want to say that this strategy is a very simple strategy. It's a very simple strategy, and you you don't need too much to be able to implement this strategy. And please, I know you know a lot in Forex, and we have a lot of people too here that know a lot. All I'm just asking is just relax while I take you through this journey, okay, regardless of whatever you know in Forex. Let's go straight to the point. Today's section, we'll be talking about the SMA trading strategy, which I call the stress-free strategy. This is a proven strategy. This is a strategy that I've worked over and over and over and over. So many people in the community have also tested it and it's working. So it is one of the best strategy that you can do to earn money in the forex space. All right, today we'll be covering some topics or some topics. All right, I want you to know what we're covering before we go into it. First of all, we'll be talking about what the SMA strategy is all about. We'll also look at why you need the SMA strategy. We'll also talk about how to use the SMA strategy, that's practically. And finally, we're also going to talk about how to set your stop loss and take profit using the SMA strategy. These are very, very important stuff. Please pay attention to every bit of this presentation. Now, let's go straight to what SMA strategy is all about. What is SMA trading strategy? For as we all know, SMA is just an abbreviation for simple moving average. Okay, simple moving average. That is what it is. So the SMA trading.
After they shall be living on very deep rock. One of my friends came back to state from there. They took that statement. After 2 days, they don't.
All right. Sorry for that one. Let's continue.
How do I get it? How do I collect it?
Hello, can somebody please control that?
Mr. Michael, please mute your mic. If you unmute your mic again, I will remove you from the meeting. Please, this session is being recorded, please. Go ahead, Rema.
All right. So the SMA trading strategy means using the SMA indicators to get the next movement of the market without doing complex analysis. That is simply what it means. And this definition is given by myself. You might not get it anywhere as this, but per my experience in this strategy, this is what I can describe this strategy as. So it is a strategy using the SMA indicator to get the next movement of the market without doing complex analysis. That is what it is. And I'm a proud member of the Web 360 community, one of the CEOs of the community. Thank you. Let's go straight into the presentation again. Now, the next thing is why I need this strategy. Please hold on. I don't know my phone, my device is not responding. Okay. All right. Why you need the SMA strategy? Number one reason why you need this strategy is that it helps you make money in the forex space without worries of fear. A lot of people can attest to that. Those who have started using this strategy, their fear. Number two is that it saves your time for complex analysis. You don't need to worry about too much analysis in the market. The analysis is already playing out in the indicators for you. That is one good thing about this strategy, and that is one reason why you need this strategy. Another reason why you need this strategy is that it gives a strong signal for the next movement of the market. Very strong signal. Yes. The fourth one is that it helps you win 7 out of your 10 trades. 7 out of your 10 trades. In 7 out of the 10. And you can even make all the profit in the 10 trades, depending on yourself. Okay? And we can see that in the community, I've been counting my wins. And other people are also counting their win. All right? That is what this strategy can do for you. All right? Then another beautiful thing about this strategy is that it works for almost all the currency pairs, especially gold. Therefore, it provides you with multiple opportunities to trade. You see, so there might be a day whereby your particular pair or your particular or your favorite currency pair isn't doing well in the market. The SMA strategy gives you the opportunity to look at another one and take a trade on that, and you're going to win. That is the beauty of this. Regardless of what you know about that pair, this is so amazing and lovely. Another good thing is that it helps you easily set your take profit and stop loss. I'm telling you, this strategy makes those things easy for you. By the time you start using this strategy, you can add the rest after the presentation. You can add the rest. By the time you start using the strategy, you will know that it has more reason why you need it. Let's proceed to the next slide. All right, it seems my device is a little bit slow. Kindly bear
Okay,
with me.
Rema, I think what you need to do is minimize and check whether you have other applications that are open on your phone and close those applications and leave just the Google Meet and what you're presenting.
All right.
All right, all those other applications.
I think I will need this screen.
Okay, I think it's okay. It's okay. Go ahead.
All right. All right. Now, let's come to how to use this SMA strategy. This is practical. Please ensure you take note of this because this is the key to the strategy. Now, this is it. We are going to be using two different SMAs, and the first one is the 25 SMAs, which is going to signify the signal for sell. Okay, and we are going to also use 5 SMA, which signifies the signal for buy. And I've used the red and black for them. I use the red for the SMA 25 and I use the black for the SMA 5. Now, the key or the secret, the secret to the win in this strategy is to getting the signal right. Okay? And when you get the signal right, ensure that they intersect, because the secret is in the intersection of these two SMAs. Okay, your signal comes in once the two SMA intersect each other, and that is what you use to determine whether you are to buy or to sell. All right, if you don't get this rightly, let me say it again. I am saying that the key to get the signal right is in the intersection of these two SMAs, that is the 25 SMA and 5 SMA. And which of the SMA that is above after the intersection, that is what will give you the signal. All right, let's demonstrate this in our chart so that you know what it's all about. I'm going to my chart right now. I'll be showing you how to set up the SMAs, and then we continue with the strategy. So I'm going to my MT4 right now. All right. Now you can see I am on my chart. Okay, you can see all the candles here. This is the gold pair, the gold and the USD. Okay, all right. So I want to set up my indicators now, my SMAs. I want to set them. Okay, now this is how you set them. First of all, you come and click on the F key. If you look at the top of your screen, where we have the plus and we have the F and we have the icon that has triangle, circle, and rectangle, and we have the dollar and the plus. Okay, so our focus is going to be on the F. So you click on that F. I'm clicking on it right now. Okay, then when you get to this place, you see at your extreme right, we have F plus or F plus. Okay, you are going to click on that. When you click on that, this is what we show. You're going to see trend. On that trend, you are going to see the moving average. So we are going to click on the moving average because that is what we want to use for the strategy. So I'm going to click the moving average right now. Yes, this is the moving average. Okay, right now it is 5 years. So you come to the place where you have period. Okay, period, where you see the 5 year. You have to change it. First of all, you have to change it to 25. I want to set my red moving average or my 25 SMA. I want to set that one first. So I'm going to type 25 here. Okay. Then I'll come to where we have the style, the pixel. Okay. We have the color of the pixel there. So I'm going to change it to red because I have stated that the 25 SMA is my red, and red signifies a cell for me. You can use any color that you choose to, but I choose to use red, and it's to make me identify the trend easily. Okay, so I'm going to use red. I'm going to use red right now. Okay, yeah, this that's right. So once you select the red, then what you need to do is just to click on done. When you click on done, all you need to do, oh, sorry, all you need to do is to go to your chart and ensure that it has reflected on your chart. So I'm going to my chart to check it. Yes, it is here. This is it, the line, the red line that you are seeing in the chart. This red line that is seen here is my 25 SMA indicator. Okay. Now I'm going to add the 5 SMA indicator right now. So I'm going to use the same process, but different parameters in it. Okay. So I'm going to click on the F again. Yes, I've clicked on the F. Then I'm going to click on the F plus. Okay. I'm clicking it right now. Okay. Then I'm going to come to moving average. I'll click on it, moving average. Okay, now the period will be changed to 5. Please, this is very, very important. The period should be changed to 5. That is what will make the indicators set rightly for you. So I'm going to change this right now. I'm removing it. So I'm putting 5 right now. Then my style or the pixel, I'm going to change it to black because black, I've stated that it should indicate or means my buy. I choose to use the black because I don't want my chart to have just green, red, green, red, green, red. Then I'll be confusing myself. So I want to use a color that will be very, very easily identifiable by myself. Okay, so I'm going to use black for this. So after I've clicked the black, then I click on done. Now, before I click on done, you see where we have the 4 pixel, this pixel, all these things that we have here is just to modify the thickness of the indicator, the thickness of the line. Okay, that is what it is for. So I'm going to click on done right now. All right, now we can see we have 2 averages there, moving averages. So I'll go to my chart and ensure that this is displaying on my chart. So I'll go to my chart right now. That's it. So it's there. You can see the black line there. So which is what? The 5 SMA. All right. Now, guys, this is where the beauty of this strategy comes in. Now, after you have set in this, the question is, how are you going to use it? Now, this is where you come to how you're going to use it. If you go back to the presentation, I told you that the key to this strategy is where there is intersection. Okay, where there's intersection, and after the intersection, which of the SMA is above or above? Okay, which of them is above? The signal is in the one that is above after the intersection. I take that again. The signal for your next move to trade is in the SMA that is above after the intersection. This is very, very important, please. Okay, so what is on top of the intersection is what you should trade, not other. Can't pick this call now. Wow. All right, sorry for that one. Someone was calling
Okay,
me.
Rema.
So,
Yeah. All right. Take that again.
all right, this is what I am saying. I am saying that the key to the right move or the signal that you need is in the intersection. That is where both SMA crosses each other. This is what I'm talking about. I'm talking about a point like this. Look at this point here. There is an intersection. Let me use this. There's an intersection here. You can see that. There's an intersection here. Okay. That is where the signal starts coming in, where the SMAs intersect. Okay. Now, how do you know what to do? Whether you are to buy or to sell. Don't forget, we said that the black SMA is for the buy and the red SMA is for the sell signal. Okay, so it means that whenever you see the two SMA intersecting and the black is on top, just like what we have here, the black is on top after the intersection, the black is on top, it means that you are to buy. It means that you are to buy that particular currency pair. So you can see from here that immediately it is affected and the black one is on top. What is happening in the market? It keep on buying. You keep on buying. You see, that is it. All right. Now let's go to another intersected point. Look at this intersected point over here. Over here. This point. You can see that the two SMAs intersected over here. They crosses each other over here. Why they cross each other? The question is which one is above, which one is in front, which one is on top. The red one is on top, which means what? You are to sell. So anytime they intersect and the red one is on top towards the right, okay, is on top towards the right, it means that what? You are to sell. As you can see, the market keeps selling after the intersection. Let's look at another point again. Okay. Let's look at another point again. Look at an intersection here. There's an intersection here. Yeah. Yes. This is an intersection here. You can see the two indicators. That is the 25 SMA and the 5 SMA. They have intersected. And we could see that the 5 SMA is above or above it. All right. Why is the black one is above? That's the 5 one is above. What are you supposed to do? You buy. And you can see the markets keep on buying since then after the intersection. You see, it keep on buying. It keep on buying, keep on buying, keep on buying, keep on buying, keep on buying till it got to this point. You see, that is the beauty of this strategy. All right, look at this one here. Look at this one here. Look at this here. Look at this intersection here. What happened? There's an intersection there. And what is, when it intersected, what is on top? What is above? What is in front? The red one. And the red one was signifies a cell. What happened to the trend? The trend became cell throughout to certain points. All right. Now, this particular thing keep on playing. You can see it for yourself. You keep on playing. Look at an intersection here. Look at an intersection here. Keep on playing. Look at an intersection here. Keep on playing. Keep on playing from generation to generation. Since time memorial, it has been playing all along. It has been playing all along. Look at this here. Look at this. Look at this. Look at this. Look at this. Just like the way our educator will say, he will say sweet. This is very sweet. Look at this. Look at this movement. Look at this intersection here. You see, the market keeps selling, 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 selling. What is on top? The red one, which is what? The 25 SMA. So it keep on selling, selling. So before it even change any signal, before it changes its movement, you have made your profit and you are out. That is the beauty of this strategy. Look at it. It keep on happening. It keep on happening. Keep on happening. Keep on happening. Look at it here. Okay. Look at it here. Look at it here. You see? So that is the beauty of it. This is for gold. You can go and try this in a different pair. For example, let me take a different pair right now. The beauty about this is once you set it up, it works for other pairs like that. It's automatically set up for other pairs. You don't need to set it again. Let's take this particular Euro CHF. Look at this chart. Look at this. You see this market right now? You see it intersected here. It intersected here. And what is on top? The 25 SMA, which is what? The red one, which is a what? A signal for that market. That market has been selling. Okay, this is a different currency pair. Look at it here again. It's playing out here. Look at it here. What happened after then? It keep on selling, selling, selling. Okay, look at here. Look at it here. Look at the intersections here. Look at it here. Keep on selling. Okay, now come to this place. I want to look for a buy. Look at this intersection here. Look at this intersection here. Look at this intersection here. What is on top? The 5 SMA, which is the black one. And what happened to the market? It keep on buying, keep on buying, keep on buying till it change the trend. So before it change the trend, you have made your profit. This is the beauty of SMA strategy. You can do that for different markets. You can see it keep on happening, keep on happening, keep on happening. Nevertheless, the only pair that I know that this strategy couldn't work for after I tested was silver. But every other pair that I've tested it on is working perfectly. It's working perfectly. Let me take a different pair again. Today, oil. Let's look at oil. Somebody reminded me of Nigerian oil today. All right, so this is US oil.
So this is UK oil. UK oil, not US.
That's UK oil. Okay, look at this. Look at this. Look at this signal here. Look at this last signal here. Look at this. Look at the intersection. Okay, look at this. Look at this. And when it is intersected, what is on top? The red.
Red. The red.
Exactly, the red. And what happened? It keep on selling. It keep on selling. You see, so before it even get to the point where there will be a reversal, you have made your profit and you are out of the market. That is the beauty of this strategy. Look at here. Look at this. 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 Look at this here. Look at that intersection. What happened? What is on top? The black. That's what the 5 SMA. And what happened? They keep on buying. This is money. This is money. So you can't have this strategy and be struggling again. That is just the beauty of this strategy. All right. Now let me move. I think I've shown you a lot on this. Now let me move to how you can take advantage of this strategy to set your stop loss and your take profit. Now the thing is this: once you see the signal, my people, with this, you don't need calculations for entry. Not too much analysis for should I enter the market or not to enter. See, once you see the intersection and you see the one that is above, just wait for that particular intersection. Just wait for you to see clearly that this one is above or this one is on top. Just once you see that this one is on top and you can see it clearly that it's on top, my brothers, my sisters, pick your trade. Pick your trade in line with that movement. Okay. Now, when you enter the trade, you might be asking, so when am I supposed to come out of that trade? Where am I supposed to take the profit? This is where I come to the next segment of this particular training. Let me use this particular one. Good. Okay. All right. For example, let's use what happened today in the market. We can see I'm talking about this particular location. Let me use a bigger location first so that it will be seen from the bigger picture first before we go to the smaller picture. Please forgive me, my small boy noise might be entering into the presentation. I'm sorry about that.
It's all right. Go ahead. We can hear you.
Okay. All right. So let's look at this place right now. We know that this particular market, the signal is what? Please, what's the signal for this market?
It's a buy.
Thank you. It's a
buy signal.
It's a buy signal.
It's a buy signal. That is it. Now, let's say you have taken the trade from somewhere here. Okay, somewhere this area here. You've taken the trade because you have seen the signal. Okay, you've taken the trade here. Now the question is, where should I take my profit? How should I set my profit in this case? Am I going to wait? Because certainly you can't tell how long he's going to buy. Certainly you can't tell how long he's going to buy. But you just know that the current move is what he's buying and he's going to buy for some time. But you don't know how long it will go or how long it will take. So there is a strategy we use. And that strategy has been working. Okay. When you take positions like this, okay, you have taken the buy around this area, like I said. Around this area, like I said. I believe you are all seeing the area I'm marking.
Yes, we can see.
All right. You take it in that area. Your stop, let me start with the take profit first. Your take profit should be, this is a buy, don't forget, this is a buy. Should be in consideration with the previous resistance of the market. For example, if you look at this place, this particular point here, where I'm moving right now, this particular point, you could see that there is a resistance there. So from what we've learned from the basis of trading, from what we've learned from our foundation class, we know that whenever a trade is getting to a previous resistance, it is likely that the resistance will still play on again. It is likely that it will still play on again. So in that case, what would you do to be safe so that the market don't change its move at that place? Now, this is the strategy we do. Okay, you measure the ending point, this ending point, which is the former support here, okay, to this resistance. You measure the two of them, okay. When you measure the two of them like this, you look at the line, okay. Now you ask yourself, what is the halfway between these two long lines? The halfway will be somewhere here, okay. It will be somewhere here. So you always look for the 50% of it, okay. It will be somewhere here. So when you put it in somewhere around this area, my strategy is this: I don't set the stop loss in that 50. I know that it will always, I don't set my take profit, rather. I don't set my take profit in that particular 50 area. I know it will get to that 50. So I set my take profit around the 30 or at most 40. This is what I am saying. I am saying this is, for example, now this is the 50. Okay. This is the 50. This is close to the 50. Okay. This is it. This is close to the 50. All right, for example. Okay. Now, I am going to set my take profit below that 50 because I know it will surely get to that 50. So, once you do it like that, you would surely take your profit because the market will buy, and before it will do any reversal, it will get to this point where there was a former resistance around that area. So you could see that's why when it got to this place, this particular place, it started what? Reversing. It got to this point too, it was reversing because what? There was a previous resistance there. But you don't really need too much of this technicality telling you, okay. To get it just simple, just set your take profit half, a little bit less, halfway the former resistance in case of you buying, okay. In the case of buying. Now you might not get it right. Let me go to another example and show you. Well, this is what I'm saying. Let's come to somewhere here. I don't want to use buy again. Okay, let me use this buy again. Okay, look at here right now. Okay, I'm considering this particular intersection. This is where I'm considering. All right, so let's say the market signal already shows you what? A buy. Okay, so you decided to be patient enough to wait for the market to get to this place so that you will be sure that yes, the buy is certain. Okay, so you get to this place, so you enter the market around here. So where will be your take profit? Now, if you want to sell the take profit, you must consider this previous movement here. This previous movement here, this resistance here. This resistance here, you must consider it. That, okay, if I want to take my profit right now, my profit should be, since my entry point is somewhere here, I'm coming, let me make this thing, since my entry point is somewhere here, okay, which is naturally, it's already halfway from the former one, okay, so, but it's already showing that it's going to buy. So if I want to take a profit right now, I'm going to take a profit somewhere around here or here, so that when it gets, before it even get to that resistance, I've taken my profit. Please, what I'm saying, I want to be sure it's making sense to somebody, please.
Very well.
All right, thank you. Now let us go and look at the
Please,
scenario.
just if what is teaching is clear, just signify by using the emojis, please.
Okay.
We'll take questions at the end, okay? We'll take questions at the end. Continue.
All right. Let me go to the sell right now. Let me look for a sell position. Okay, this is a sell position. This is a sell position. I'm looking at this. I'm looking at this. Let me turn this arrow. Anytime I try to turn this out, that's when there's always issue. Let me leave it like that. Okay. All right. So look at this right now. This is sell. Okay. This is sell. Once you get to this particular point, okay, let's say you enter the market, you've seen the signal that it is what? It's selling. Let's say you enter the market around somewhere here. Somewhere here. Okay. You've entered the market around somewhere here. Now, what will you consider? You have to go back to the chart and look at what? The previous support in this case. Because what? We are selling. This is where the market is selling. So we are going to look at the previous support. This was the previous support here. There is another previous support here. You can see the support after the sell. The first one is this. The first one is this. Okay, you can use this as one. Another one is here. This. You get it? Is this. Okay, so you want to consider the first one, which is this, the one that is close to your position. This. All right. When you consider this, now you ask yourself, what is the halfway between here, this place, to this top? Okay, you can even take it from somewhere here. All right. What is the halfway between here and here? The halfway between here and here should be somewhere here. Right? It should be somewhere here. So if it is somewhere here, what you need to do is this. If it is somewhere here, you want to take your profit above this. Your profit should be around here. Okay, it should be around here. Around this place. So it will definitely hit it. So you can go and check the chart over and over again. It has been happening like that. Look at anywhere there is an intersection. Look at the previous place. Look at the previous support. In this case, it's a sell. In this case, right now, okay. In this case, it's a sell. Look at the previous support. The previous support was beyond, okay. But what happened? The market sold beyond the halfway of the previous support. So if you set your take profit above that particular part, or above the take profit in the case of sell right now, you will surely make your profit. That is what I'm talking about. Let us come to a buy. In this case of a buy, in the case of a buy right now, this market is buying. What will you consider? Okay, you start from somewhere here right now. I'm coming. This is what I'm considering. I'm considering this part. Okay, I'm considering here. Okay, so we have seen the indication already that what the market is buying. So when it gets to this place right now, it is buying. So let's say you enter the market around somewhere here. You've seen the signal. Okay, you enter the market around somewhere here. Okay, so in this case right now, you can see that the next, before this market, there has been a resistance which is around here. Okay, so in this case right now, what I will do, I'll set a take profit that is less than this resistance here. Once I take it, I'll wait for the market to see what it will do. Once it go beyond this particular resistance, you take another trade and wait for what another resistance and see this one here. So it always play like that. Always play like that. That is in the case of the take profit. Now, in the case of the stop loss, please take note. I know very well that stop loss, everybody have
Mr.
their own.
Rema. Yeah,
Yes.
Mr. Rema, before you proceed with the stop loss.
Okay,
So,
sir.
okay, help me mute on your end. Help me mute your mic.
Okay, I'm coming.
Okay, so you see this strategy and what Mr. Rema has been showing us. You can go back to your MT4. So this is where there's one of the videos I shared today. This is where we need to learn and understand how to use what we call the trailing stop loss. Okay, it's going to be very, very useful to us with this strategy. And again, this is where the scalping strategy also comes in. Okay, scalping, because based on what it's showing us, you see, you don't even need to wait or maybe check what the 50% or half of, where you are taking the trade and where the trade could possibly get to. You see, within that small movement, if you're a scalper, once this strategy is confirmed and you see that it's going to buy, okay, all you need is a few movements, a few pips. And this is where you time the market, okay? This is where you time the market. You don't rush into the market. You just wait for the market to play and come to you. So the very moment you confirm at that intersection that the market is buying, you take a position and you use a good lot size, and in a few pips, you make good profit and you leave the market. You don't need to stay too long in the market. Within that short movement, you can make as much as $20, $30, $40, depending on, your lot size. And then you're out. So we're still going to talk about some other things, and that one comes with you being disciplined and having a plan while you're trading, okay? Because we don't own the market. Anything can happen, but when you see it come to you this way, take good advantage of it. If you want to scalp and then you are scalping and you're doing 0.01, 0.02, you're just wasting your time. Take a good lot size, take that trade, few movements, few pips, you've made some good money and you're out of the market. Okay, don't be greedy as well. Don't try, oh yes, the market will keep buying, no. Determine for yourself the same way you determine what you would possibly want to lose, also determine what you want to gain. And once you get that, exit the market. Don't try to be greedy and think that, oh, you can make all the money that day. Take what you want to take and leave the market. Rema, you can go back and show us the stop loss.
All right. Thank you so much, boss. That is exactly what it is. You know, when I started implementing this, doing my research, I I had those, in our community we have a lot of people that are very busy. A lot of people that are very busy. So I had them in mind when I was learning this. So, and I also had the scalpers in mind too. You get me? So I said that no, there must be a strategy that works for everybody, regardless. You get it? So just like the way I'm talking about stop loss and all of that, as a scalper, you don't need that. As a scalper, you don't need that. You know what you want. Back, you are out. You understand me? But for those who will be very, very busy, um, this signal will also help you. But I'm telling you, it helps the scalper more. It helps the scalper more. Okay, so it's for everybody. That is what I'm just saying. Thank you so much, boss, for that. Thank you so much for that. Boss, today somebody was asking me, what lot size do you usually use? Why this? I was like, if I want to stay short in the market, I use large lot size. If I know I will not be staying long in the market, I know I'll be very, very busy. I can't monitor the trade. I'll use a small lot size and set my stop loss and take profits, and that's all. I will not monitor again. Once in a while, if I take my data, I will know. You see? So that is what it is. All right, let's continue to the stop loss. Now, with the stop loss, please, this is where you are likely to get the remaining losses in among the 10. I told you that this strategy, out of 10, you are going to win 7, and that 3 that you will lose is mostly as a result of improperly setting of your stop loss. Now let's go back to the chart and see certain things. Now, for example, look at this particular market right now. It is buying. Per the research that I've done, you are also going to check it right now. Anytime the market intersects, it is difficult for the market to go beyond that intersection, except with the case of gold, because of its volatility. Okay, and with gold, it plays out 70%. For example, over here right now, this was the intersection. You could see that the next move, the market later passed the intersection and came down. Then later on, it continued with the normal trend of buying. Now, one good thing about this strategy is this. Please, guys, regardless of whatever the market is currently showing, for example, now somebody might see the signal like this, and the market is currently showing a sell. Fear not, take your trade. Fear not, take your trade. It will play out. Okay, now back to what I'm saying. If you look at this case right now, after the intersection, the next move here, you could see that it went beyond the intersection. So it is always advised that if you want to set your stop loss should go under, should be under the intersection. So that's the next, for example, somewhere here, which is what the support. Okay, somewhere here. All right, or somewhere here. This also, so there's another support here. I don't like using the first support or the first resistance or the first support, any of them. I don't like using them for the stop loss. I want to use the second or the third one, because the first support or the first resistance, in this case, I'm talking about support, okay? In this case, I'm talking about support, okay? In this case right now, it's a buy market. I'm talking about support. I would want to set my stop loss somewhere here to make the market play easily for me. That is for the case of those who will not be able to monitor their trade. This is not for scalping, okay? If it's for scalping, you know what you are doing. You are monitoring, you take whatever you want to take. Okay, so I want to set my stop loss here. But if you are the type that, I know some people, maybe because of they are looking at their equity, so they want to check the stop loss to be somewhere close. Fine, it's optional. But our advice, if you have a good money or good equity, put it around somewhere here. Year 2 is reasonable, but our advice here. Okay, so you could see that anytime you take it, the the market doesn't go below. In the case of buy, it doesn't go below that intersection. Let's check another intersection for a buy. Okay, let's check another intersection for a buy. This is another buy, this is a buy. So this is a buy here, this is a buy here. All right, this is a buy here. All right, we can see that after the buy, you could see that after the intersection, you could see that the market did not go beyond that intersection. It did not go below it. It did not go below it. Okay, so we are going to do a practical right now. We are going to take out of 5 different buys, and we'll see how many buys go below. Okay, so we'll check one. Okay, we checked one earlier on. I think that one, it went below. Let's take another one. This another one, it didn't go below. So 1. Let's come to this place. Another buy. I'm looking for another buy. This another buy. Okay, the intersection is here. This is the intersection here. All right, this is the intersection here. Okay. All right. So over here, you could see that it crosses the intersection, but not too much. You see, from there, continue buying. Continue buying. Let's come to this place again, another buy again. Look at this buy. Look at this buy. Oh, shit, sorry. Look at this buy. Look at this buy. What happened? It continued. It did not cross it. So we've had like 2. In fact, that other one, I don't want to count it as, because that crossing wasn't large. So it's 3-1 right now. Let's go to another one. Look at this one. Okay, it intersected. Okay, after the intersection, it didn't pass again. It didn't cross again. Look at the next candle. It didn't cross. Okay, that's what 4-1. Come to this place. Look at this place. Immediately it intersected. I'm looking at the buys. Please, buys. The buy. Look at it. Immediately it crosses. What happened? It didn't go beyond that again. It didn't cross. It didn't come. It didn't sell beyond that level. It happens like that most of the time. Okay, something like this right now, it crosses later. Okay, this one crosses, but it did not cross beyond the former support. You see, it did not cross beyond the former support. So this is the beauty of this strategy. Look at this buy. Okay, over here right now, immediately it bought. The next candle did not pass it. That is just the beauty. Now let us look at it from the sell. You know this strategy, it is the sell on is sweeter. If there's a word like that, the sell is sweet, because the way it responds to sell is just going like that and like that and like that. let me take the first cell. Look at this cell. You see, this is today's trade. Look at this cell. This cell, after it intersected, it did not cross that intersection again. It went down till a while before it came and crossed it again. So anybody who set his or a stop loss around here is safe. Anybody who set his stop loss around here is also safe. Somebody might say it's too far. It's all there is. It depends on anybody. It depends on your own choice. Okay. The first trade I took today, my stop loss was here. I placed it here. No, around here. Okay. And I took the go trade I took. This was where the stop loss was. And the profit was somewhere here. Somewhere here. Okay. And I took it. You see, after that again, maybe Madam Ekui also entered the same. She also picked the trade and she put it somewhere and she got it. All right. That is the beauty. Let's go to another cell. This is another cell. Let's look at the intersection. Intersection here. All right. After the intersection, what happened? The market did not go, did not reverse beyond that intersection. It went down like that. Look at this place too. I'm coming. Let's look at another cell. This is another cell. You can see it did not go beyond that again. So this is, let me put it. In fact, I'm getting to even call it 80%. But because Forex no be anybody mate, let me just call it 70-30. You see, that is just the beauty of it. All right. So you want to set your stop losses higher than, in the case of selling, you want to set it higher than, let's say this case rather, higher than that your intersection, considering the previous resistance. Okay. Or considering the previous or the second previous resistance. In this case now, let's say this is the previous resistance here. This is the previous resistance here. Okay, in this case. Okay, then the second, pardon my English, the second previous resistance will be somewhere, maybe right now, even this one, they are even in the same level, maybe somewhere here. That in this case, this should be the second. Okay, in this case, or this, because this one is lower, so you don't even want to consider this. This should be this. Okay, all right. I know take profit and stop loss is one topic that is taste and preference. So I'll pause here. Then, if there are questions concerning the strategy, we can ask. Thank you so much, boss.
All right. So let's quickly take questions before we round up with other things that we want to share with the community. Mr. Peter, please help me with picking out those who have questions. We'll read out from the chat box and also from those who have raised their hands as well. So call them according to how they have raised their hands. Rema, you can mute your mic so that we have a silent room. Thank you. All right, Mr. Peter, go ahead.
I think, is it possible for us to maybe stop recording, if that's okay?
Questions is important for the recording as well.
Okay,
Yes.
All right, cool. I'll take a few questions on the chat and then I'll go straight to the hands. But I think it will only be fair if I go with those who came on board first. So I'll take the first hand that has been up since EMH Global. If you could just lower your hand and then unmute and then go ahead with your question, sir.
Okay, thank you very much. First of all, I must commend Mr. Rema for discovering this strategy and also coming to take us through in the community. I think this is one of the beauty of this community, that we learn, we share what we know so that we can collectively grow. Mine is just to find out using this strategy, I've noticed that there is no time frame needed. Is that correct? That's just my concern. We're not using it based on any time frame. Is that correct? Over.
All right, thank you so much, sir. In fact, this is a very good question. When I was learning this strategy, where I discovered it from, it was used on a daily time frame. Okay, it was used on a daily time frame, but I had to squeeze it into the 1 hour time frame because I can't wait. Me, I don't have patience to be waiting for one day before I take whatever I need to take. And if you put it on a 1 day, based on what the person used, now this is the person used 50 and 10. The person used 50 and 10 SMA for.
Okay, so I think we need to understand why we need to choose those numbers. I think that you did not explain that, why we choose 25 and 5 and now this person used 50 and 10. I think we need to understand that part equally. Thank you.
All right, thank you. That is what I'm saying right now. The reason why we are using the 25 and the 5, thank you for that question, is because of the time frame that I've squeezed to 1 hour time frame. Okay, I am somebody that I don't really have the time that I have is very little to monitor things. Okay, because of the busy schedule I have at work, so I can't be waiting for the daily time frame whereby it will play today. I will have to wait for 3 days before the intersection will come or something like that. No, so I had to squeeze it into the hour time frame. So I was able to do my mathematics and do my division, and I realized that 25 and 5 is best fit for 1 hour. That is how I came about that, please. Thank you.
All right. Thank you, Rema. If you could just help me mute again. So by that, I think the next question, I'm going to pick it out from the chat. I think that has already been answered by you, which was raised by Mr. Kwan Kunle. What's the best time frame to trade this setup with? I think you've just answered that. And the other question on the chat by Stephanie is, can this strategy work for a short time frame, 5 to 15 minutes?
All right. Thank you very much, Madam Stephanie. Please, no. It will not work for 5 and 10 minutes. In fact, looking at the way the SMA works, you even the 30 minutes is going to be challenging. But some people are squeezing it, okay. But I realized that the least SMA on the MT4, I don't know about MT5. On the MT4, the least is 5. I think it's 5. Okay, or yeah, I think it's, if it is less than that, you can squeeze. Okay, but please, this particular strategy, the 25 and the 5 is for the 1 hour. If you want to do less than 1 hour, you need to squeeze your SMAs. and you must get your mathematics right, please. So for that question, I would say no. It will not work out for 5 minutes and this. But if you can still use your brain and realize that, okay, the signal is already going to be buying, why not? You can set your SMS to, I mean, your time frame to 5 minutes and pick whatever I want to pick. It depends on how you use it. Okay. Thank you very much.
All right, thank you, Mr. Rema. I can't really see any hands up again. Just to add to what you just said, on the M5, it's also the same. The lowest time frame is 5 minutes, so it starts from 5 minutes. So the M5 and the M4, they have the same time frame. And then there was a question again, somebody did raise. I'm trying to go get that question. Now the question is by Olalekan. Sorry, sir, I missed Omar that I missed that question. He said, how does high impact news play out on this strategy?
Oh, wow. Well, you could see on the chat. High impact news there. Now, high impact news, bros. I beg. High impact news is high impact news. Okay. This strategy, the only thing that can work against this strategy is you not setting your parameter rightly and the days of high impact news. That's the only thing that I think that can work against it. But so far, usually the indicators have been giving sign of the high impact news. That is what I've seen. But I am not totally giving my submissions on that. That is all I can say, please.
Okay, let me add to that. Rema, you can mute yourself. You see, everyone is advised on a day of high impact news, you either stay off the market, okay, and allow it play out, and you see the direction the market is going before you go back into the market. But if you are already in, or you were already in a trade before the high impact meets you, you are already in that trade. So it's a 50-50 thing. It could go either way. It depends on, the data or that is released, what the impact of that will be in the market. Okay, so when it comes to high impact news, any day there's an high impact news, you need to be very careful, okay, when you're trading. So if you do join the foundation class, you would hear our educators say, sometimes even when the data is released, you don't jump in almost immediately because, okay, the market started selling or the market started buying. You wait and see how it plays out, because most times after an high impact news, there's always a sharp reversal if the market was buying or if the market was selling. So there's usually a sharp reversal before the market will now either stabilize and then take a direction. Mr. Peter, proceed.
Boss, sorry, before Mr. Peter comes in, I was thinking maybe we could go to the day of the high impact news and check something like that memorable day that we had. I think 1st April, right? Was it 1st April?
Yeah.
Yeah.
There was one for 1st April. There's most likely to be one on this Monday that just passed. So where you had the GBP on bank holiday, you might check that one, and then again you can go before you go to the 1st of April.
All right, let me check some here. Okay, while somebody is asking the other question, we can be checking that.
Okay, Mr. Peter, proceed with other questions.
Yeah, I'm just running through the chat to just see. Okay, cool. I think I think those are all the questions, and then for those who are asking for impact news, I know we already have it, but I've just shared on the chat the links to check news before you go into the trade, to make sure that you are aware of what's happening and what's going to happen. There's always a forecast for news for all throughout the week, even before HFM gives them update on the market sentiment on the Telegram group. All right, we have a hand raised up. I'm going to ask, I think his father, so please, sir, the floor is yours, sir, and then I would lower your hand.
All right, thank you very much. Thank you, Rema, for the training. Now, for the intersection of these two SMAs, how often does it happen? Is it if one is using the 1 hour time frame, does it mean that at every 1 hour we check for the intersection? So for how long? I mean, if you recommended a 1 hour time frame, so if there is an intersection and then one begins to trade on that intersection, does it mean that after 1 hour another intersection develops, or how does it work? I didn't get that. I don't know if my question is clear.
Yeah, your question is clear, sir.
Thank you.
Doc, let me go to the chart and show you, okay, something. You know, look at something like this right now, okay. You could see that there's an intersection somewhere here, okay. There's an intersection around somewhere here. All right, you could see that this is a 1 hour time frame, so every candle represents 1 hour. So it means that the whole of today,
we are not seeing
the intersection has happened only once, okay. So it has to go like that, okay, and wait till another time again. It could be days, okay. So the intersection doesn't mean every 1 hour, okay. It's just that it will happen in one particular hour, okay, and you take your positions, okay. So it's not something.
Sorry, what I wanted to find out now, like the intersection has taken place at that, I mean, at that point, and maybe I come in probably at the point where the almost at the tail end of, you see, oh, your this thing is off, your screen is off. Okay, I come in where just at that uppermost point, right? It's still selling. I mean, it's still buying. Sorry, it's still buying. So maybe the intersection happened at that point, but then I probably come in at that point where you have the current candle developing. I don't know whether you are getting the point I'm making. Hello, Rema.
Yeah.
Okay. Go ahead, Rema.
Not really getting the question right.
No, can you show your screen again? Let me.
Okay.
You see, the intersection happened at this point. All right.
Yeah.
So, but I didn't come in. Probably the time I signed I tried to trade. All these other candles have built up to where it is at this moment, as we are speaking, where the candle is at this moment, as we are looking at the candle, you know.
Okay.
All right. So it's still, well, from the listening, it's still selling. So if I'm coming into the market at this moment where this candle is developing, so I still take a buy trade, right?
Okay. In this case right now, sir, it will be very dangerous. Okay. This strategy has given you a signal. You don't know how long that signal will play.
Okay.
Okay. Yeah, you don't know how long that signal will play. So taking a trade right now at this particular current position is risky.
Okay.
It's very, very risky.
So it's only when we see that only, so trade is only to be taken only shortly after the intersection has taken place.
That is why I said something earlier on in the presentation that this strategy gives you several opportunities. When you come to this pair right now, you realize that what you have missed out.
Okay.
You realize that you didn't see it. You could go to a different pair, check here, and see which one that is coming closer. You see, this one is not too far. You understand what I'm saying? This one I just opened right now.
Okay.
Okay, you can, if that one too is too far for you, you can look at another pair that you think you like. Look at this one. Okay, you can you can just be scrolling through and be searching for another opportunity.
Okay, I get it. I get it now. I get it now.
Yeah, let me also add to that. Dr. Meka, you can mute your mic, sir. So you see, just like Rema said earlier, the signal comes at the intersection. And you always see him post in the group when there's a particular signal that is about to play out. He might alert people in the group maybe some minutes before that signal plays out. And for those who are ready or prepared at the moment, they can actually take that trade. So if you have missed that opportunity, let it go. You don't chase after it, just allow it. Just like you said, you could check other pairs and see what is playing out in other pairs, and you could get other opportunities with other instruments or other currency pairs. But once the market leaves you, please don't go chasing after the market. Don't. Just allow it. That's what I would say. All right, let's proceed.
Yeah, we have one more hand up. So please just note, guys, after this hand, we might not take another hand if you don't come up in the next 30 seconds or 1 minute because of our time. So we have the floor now for Ore. Ore, you can please unmute, lower your hand, and then take the floor.
Guys, thank you very much for this presentation this evening. You really boosted a lot into our minds and all. I think with the brief information Mr. Rama and Mr. Elvis just gave, one thing that came to my mind, based on this M4 and M5 of what we have, is there any way you could pull in, I mean, whenever the intercession comes in, separate from us getting signals from more like the group, is there any way we can set up something on our phones to create an alert to us as soon as the intercession occurs? Do you get what I'm saying? As in, whenever the intercession occurs, is there any way we can like pull in a signal or set something to alarm us to be aware when it happens?
All right. Thank you very much. You know, this is a big community. Madam Ekwi, after going through this strategy, she shared a video with me that depicted that it could be done, where you actually get an alert in one way or the other. Okay, apart from the group. Okay, but I am still looking into it. But people can also take it upon themselves to see how best they can do that. I believe there is. If you research, you will get. There is because the video that she sent to me said that. So there is a way. But just that I have not had time to also go to see what I can do about that. So there is, please.
All right, thank you. I think we'll keep improving on this until we're able to get everything we need to aid and enable us use this strategy very well. One other thing we would want to add, which I'll be calling Mr. Peter to, share with us, is the fact that irrespective of whatever strategies that we are, using or that we have discovered or learned, there are basic and fundamental things that we need to do, okay? And add that to whatever strategy that you're using, okay? And I'll be giving the floor to Mr. Peter to quickly run us through, some of those things we need to have at the back of our mind, irrespective of how beautiful and how good the strategy may be, because these are the things you need to know and understand as a trader, and it will also help you, be disciplined enough to make sure that you don't get carried away and you do things rightly. So, Mr. Peter, the floor is yours. Mr. Peter, can you unmute yourself?
Oh, sorry about that. My screen just got frozen, so I couldn't even do anything. Just give me 1 minute. I was just looking at our time, but I'm just going to take a few minutes to just quickly do this. Let me see what I'm sharing now. I think I am sharing my screen now. Please, if you can see my screen, just let me know, and then we can quickly. All right. Can you see my screen now?
All right, go ahead.
All right, good. Now, based on what Mr. Elvis has just said, and then I also want to give credit to Mr. Rema and the entire community and everyone that is taking time to be on this call up to this time. Our initial goal was to wrap everything up in an hour, all right, so that we can all go back to rest our heads and also take time to go through these teachings that we've seen tonight. But then again, just to add to it, this strategy, you can also deploy it into your MT5. So if you're using your MT5, for instance, where you saw Rema do the F on the FF symbol, on the MT5, it's like an N, like a Naira symbol with a cross on the side of across it. So you can also deploy that into that. But then again, we're just going to quickly share with you some guiding principle for successful trading. Now, I'm just going to rush through it, and then probably I'll share my slide in with the community and in the group. Now, what it says here about the 10 guides for successful trading, they are listed to up from 1 to 10, and it says here anyone who wants to become a profitable stock trader, a crypto trader, whatever trader only, spends a few minutes online and all of that. But I'll just skip that and I'll jump into the number 1. I tag it as G1 because that is guide number 1. Guide number 1 simply says always use a trading plan. Right? You might not have heard Rema say that, but Rema has a trading plan. I have a trading plan. Mr. Hervis has a trading plan. So also are other people within the community having a trading plan. All right. So one of the things we want to encourage people as you look through this phase of this strategy, which looks a little bit to every one of us, it looks simple. I think there's an interference. If anyone is unmuted, if you could please mute. So if just in case you find that this strategy looks a bit simple, but I want to say it's not as simple as it looks. All right. And that brings me to the question Father Emeka did ask. Sometimes if the traders moved, don't go do FOMO, fear of missing out, to jump into a moving trade. It's like a moving vehicle. You jump into it, you can miscue and you follow that moving vehicle. Same way applies to the trade. But one of the ways you can actually help your way to understand and follow the procedures is to have a trading plan. And that we, number one, what's a trading plan? What it says here, a trading plan is a set of rules that specifies the trader's entry. So that trading plan helps you to know, yes, Rema has given you SMA strategy, but do you have a trading plan? So on your part as a trader, you must have number one goal. Number one guideline is to have a trading plan. And how do you get a trading plan? You can do that by going to the compound daily calculator, which again, some of you have seen me share my own trading plan for the next 90 days, which expires on the 30th of October, all right, which I've shared with the community. It's a constant growth. I might not trade on certain days. So that means the days that you don't trade, you don't fight the market to say you want to go back and go make that profit. No, follow a consistent growth trend. That gives you an ability to understand always having a trading plan. I'm not going to be reading all of that, but I'll just explain and then we can pick it up later. And then number two, you need to treat your trading like a business. That's number two guideline. Treat your trading like a business. So what it means is that whenever you want to come into your trading platform, you want to open up your MT4, your MT5, there must be a pattern. You must have a certain pattern. You don't just jump into a Molway going from point A to point B, and then inside there you are opening your MT4. You say you want to take trade. There are so much distraction there. I'm sure no one wants to be talking to a business client inside of a bus. No, you want to have a serene and a quiet environment. So that's one of the things you must we want to recommend that people begin to look into. Treat your trading like a business. That's number two. And then number three, use technology to your advantage. And that's exactly what Rema has just shown us. But does it stop there? No. Are you going to sit back now and wait till the next time Rema is going to come again to teach us again how to use SMA 25 and 5? No. So all you need to do is to begin to deploy. You can deploy. For instance, someone did ask a question: is this suitable for a 5 to 15 minutes time frame? And Rema gave you an answer: no. So what are you going to do? Is that what you are comfortable with? Is that the technology you are comfortable with? You got to go find your way out, like he did say. Like Rema said in his teaching, he said that the video that you watch, they do it for a day, but it's not convenient with doing it for that time frame. So you have to figure a way out. So you got to simultaneously figure the technology that works best for you. Like I always tell the community, find a pattern that works best for you. All right. And so that's where the guideline number 3 comes in. Use technology to your own advantage. It is not a competition. You are not in competition with anybody. People are posting their result does not mean that you must delve into it. No. The market is not a place for wrestle. You're not coming in there to wrestle, but you've got to find a way that works best for you. That is the essence of we telling you to use technology to your own advantage. All right. Technology can also be your device. Which one are you comfortable with? Maybe in our next teaching, we might be showing people how to use this strategy on your laptop or on your tablet, using the same MT4 and the same MT5, like we already know that HFM has it. So that's another way to use your technology to your own advantage. All right. And that's that guide number 3. Now, guide number 4, protect your trading capital. Protect your trading capital. Yes, you might have a $10, a $15, $50 equity. You alone know how you got that equity. So you must protect your trading capital. What does that mean? Now, for one of the things I picked again for what Rema said was when he was deploying, he was laying emphasis on the stop loss. But I remember there was a time when we communicate, and I was telling Rema, most of your trade, I wasn't seeing stop loss. And Madam Ekwe also confirmed and said, they put stop loss because he thinks he wants to monitor the trade. But as we journey in the process of learning, now I begin to see the confidence that he's building around himself, now telling us the benefit of taking stop loss. And what does that mean? It also helps you to protect your trading capital. And that's what the explanation talks about. So saving enough money to fund the trading capital takes time. It takes time. But the little that you've already got, you want to protect it at all costs. And so another way to also protect your capital is not to just jump into any trade. No. Yes, the signal has been told, but have you actually checked the news? Let's say peradventure, the person that gave the signal did not check the news, like some of us saw on the 1st of April. Like I kept emphasizing, this trade was not supposed to be taken. because almost the entire currencies were on bank holiday. All right. But at that point, there was nothing most of us could do. But I'm glad that some of us are now coming to the realization to understand that in protecting our own capital, we've got to learn these things. So it comes with the learning. So our guideline number 4 is to protect our trading capital. All right. So you protect trading capital means not taking an unnecessary risk. So not just jump into the market, not learning what stop loss is, not learning what take profit is. Your capital is already at risk. So a time is going to come, we'll start looking at telling people how to take TP1, TP2. Like for instance, when Rema was showing us the moving, and I looked at the trend and I was just smiling and laughing. I said, in this instance, I can take TP1, TP2, TP3. So that means I'm taking take profit 1, take profit 2, take profit 3 at that movement. But it will take the first one and my profit is come. Take the second one, my profit is there. So that's another
with a trailing stop loss.
Sorry?
Using a trailing stop loss as well.
As well, sir. Yes, sir. You're very correct. Again, that is it, guys. So we need to all learn this process. Because I know for the reason why we also brought this at the end of this training is the fact that we know that there are going to be some people who just want to jump into the trade. Who just want to say, oh yes, this thing where I'm teach today, this thing makes sense. Let me just, and then you jump into a trade. You forget that equity, you've actually taken time to make that money come together. But why not take time also to protect that capital? It will make a whole lot of sense. Now the trading style I've got now that I'm using, my compounding is growing. And by October, on the 90th day, I've already seen what I'm projecting. But will I hit that? No, I might not hit it. But what if I hit it? Fair and good. But what if I don't hit it? What I need to do is to see what my capital has been. Did my capital actually grow from where it was to where it is at the moment, at the end of the 90 days? So you learn to protect your capital. All right. Then number 5, I'll just rush through now. Become a student of the market. Become a student of the marketplace. So what you're doing that every time you're coming in, you're coming to learn. You're coming to learn. You have to remain focused. Every one of us, including myself. For instance, on my trading goals, the days I don't take trade, I just put no trade. For instance, today I didn't take trade because I know my log of work in my workplace, because I wasn't in the office on Friday, and on Monday there was no office. So coming into the office on Tuesday, for me, there's nothing that would take me to me taking trade, because certainly there's going to be distraction. But then I have to understand that as a student, I don't need to come into there. Let me go to where they will pay me at the end of the month. Let me focus my attention there. So you learn how to, you also, as you become a student, you learn how to remain focused and learning more each day. It is very important. It is very important. And that's why HFM has given every one of us the opportunity to learn. Every Monday, Tuesdays, and Wednesday, come learn from the basics. Learn the foundation. Learn what it is. Learn what is a PEEP. Learn what is a stop loss. Learn what is resistance. Learn what is support. Learn what is even the SMA itself. Learn what it is all about. So you become a student. You become the product of what you learn. It's like somebody that has gone to learn his skills from his master. At the end of the day, we all know what it is to say he has gotten his freedom. So that means the guy or the lady has now become a master of that trade. And the master equips him, and that's his freedom. But in the trading sector, there is no freedom. You just keep learning. You keep staying focused. Follow the trend. Understand the trend. Understand the way the market moves. Does the market move how many ways? 3 ways. Uptrend, downtrend, sideways, which we also call consolidation. So every one of us has the ability to learn this space and then become a student of the market. The number 6, risk only what you can afford to lose. That is the most significant part of a trader. Whatever, don't go and be greedy. Your equity is not big. You want to take a lot size of 0.10. Your equity is not big. You want to take a lot size of 1. I accidentally took a trade the other day as I was about to jump off my bed, and I didn't realize that when I was doing some testing the previous day, I left my lot size on 1. And the moment I clicked the buy, straight away, when I just went to the trade, I was already on -70, running between -70 and 90. Nobody told me anything. I just jumped off the bed straight away. As at that time, I didn't have the SMA strategy on my phone, but I also have my own strategy that I also deploy. But I use that more often on my laptop. I went straight to TradingView, had a look at it, and that again comes with the learning space. And I had a look at it, saw that the market actually made a reversal. But the market is showing me from my own strategy that the market is actually buying. And I said, you know what? That's fine. I'm not going to put a stop loss. All right. I just left it. I said, let's see. But when I saw that the market was there, I said, no. If the market is going this way, let's go to a stop loss. Let's go and look for a previous resistance that can then stand as a support for this market not to go beyond. Because when you are buying, you're looking for support. When you're selling, you're looking for resistance. So I had to go look for that, put a stop loss there. And I said, you know what? There's no need for take profit now. Let's see what the market will do. And I waited for the market for the hourly, the timing, and the market started moving backward. All I started seeing was 40, 50, 60, minus, and the market kept moving. But at the end of the day, I learned it very uselessly, and I shared that with the community. Be willing to risk only what you can afford to lose. Otherwise, you wake up one morning, you have blown your account. All right. So I believe we're making sense with what we're sharing tonight. And the number 7 is develop a methodology based on facts, which is what we have seen Rema done already. He's done most of this methodology based on facts. It's not bringing SMA strategy to teach us based on ESA. So some of us might leave here tonight, or we have also been in the community, and we still go back to go and look for ESA. No. So if somebody is telling you, ask them the question, what is your methodology? What is your methodology? So you also, as an individual, as a student, which you have become via HFM and via Web 360 and via the live trading community, you also need to learn to develop a methodology based on fact. And what are the basic facts? Number 1 is news. Number 2 is the currency strength meter. And also number 3 is also on a broader scale, like they will tell you during the HFM foundation classes. The educator will tell you. These are places you need to go to check for news. There are places you need to check for news. See what is happening. What is happening, I beg your pardon. See what is happening. These things are based on fact. They are not hearsay or naysay. No. So you base your trading skills, your success, based on methodology. Number 8, I will wrap this up very soon. Always use a stop loss. Oh, I'm glad that I have this on number 8. Always use a stop loss. Don't be a master that thinks that, yes, I know it already. The market does not know you. The person on the other side of your MT4 and your MT5 is already happy. So the moment you take a trade, your broker has already taken his money. But he's going the other way. They're already smiling. And they are looking at your trade. They can see from the back end. But they really look at everybody's trade. Not really. But then there's an algorithm that helps to do that. So you'll be able to decipher which is not doing the right thing and which is doing the right thing. But the guideline is actually played in. Always use a stop loss. It's a predetermined amount of risk that the trader is willing to accept with each trade. Every one of us saw the emphasis Rema was putting on the stop loss. And one of the things he did there, which when he did that, it blew my mind, was when he said, if he's taking a stop loss, he doesn't take it at the very first, depending if it's a buy or a sell, he's not taking it at the very first resistance or the very first support, but he's taking it as something a little bit further down. What does that imply? It simply means he's saying to the system, listen, this market is going to play back based on the methodology that he already has, based on the strategy that he has in place. He's telling himself and the market that this thing is going to play out. So when you are taking your stop loss, don't take your stop loss out of fear. Take your stop loss based on what you understand on the trade you have entered, or based on what the trade you are looking to enter. Look at it critically and understand what you're doing, and before you make sure you always use a stop loss. I remember in our community, Madam Ekwi was re-emphasizing it when I gave an analysis of the importance of stop loss. So we need to focus our attention on that. Always take a stop loss. It's like driving a car with telling yourself, say, no, I'm not going to apply brake. No matter what, I'm not going to apply brakes. My brother, you will crash. You will crash. So you need to learn to know when to put these brakes on. And that's the basics, one of the number 8 part of the guideline. The number 9 is know when to stop trading. It's a very vital thing. Know when to stop trading. Don't say, Rema gave me strategies. Yes, the market is already moving. You take trade. But you've already made the relevance of number 9 flips back to somewhere around number 4 or 5. Number 1, where it says have a trading plan. My brother, your percentage for the day, which according to your trading plan, is that you want to make 3 to 6% every day. You've already made 6%. Why do you still want to go to the market? Oh, Rema just posted on the group. But before then, you already made your percentage. You've already met your goal for the day. Because Rema just posted on the group, because Madam Ekwe has just posted, because Mr. Ivis has just posted, because I've just posted, you decide to go and take a trade. The market is not a respecter of any man. Anything can happen. It can fling you out of the space.
That's where the discipline comes in.
Yeah.
And one particular trade or one currency pair, it could even be BTC USD. That single trade can give you over 6% or your 6%, and you are out for the day. You don't need going to go and start, trading other currency pairs again. Just anyone that gives you that percentage for the day, that is it for the day.
That's it. So that's it, guys. I'll give an example. Like the other day, I think it was last week. So about the trade I was talking about, I almost lost. But at the end of the day, I made profit on that trade. I made over $60 something on that trade. By the time I went to my compounding journal, I saw that the initial percentage I was supposed to make, that it was about $12. So according to the ratio that I have on my chart, it was $12. Bro, ladies and gentlemen, I'm supposed to make $12. Now it makes 60 something. Why should I bother myself going to the market again? It's all about the discipline. So maybe in our next teaching, we will talk about who is a disciplined trader. So those are the things we want to be looking at as a community to begin to help one another grow. Like Rema said to me the other day, sir, do you know that the more I'm sharing this idea, the more I'm also learning about it? And that's what it is. So it also helps you to put in check. So what it does is that it helps you to kill what we call FOMO, the fear of missing out. So know when to stop trading. I beg of you, everyone. Many of us saying this thing. Mr. Ivis is here, will bear me witness. We have lost huge money in this when we were trading, and the others with some other platform. We were telling ourselves, I want to go make it back, especially with binary. You say you want to do double up. You do double up, but the market is still going down. You do want to take on that double up, the market is still going down. Take on that double up, the market is at the end of the day, before you know it, your account is wiped out. So as I come into my rounding up, one of the things I've learned in one of the currency pair was the currency pair that actually made me lose money, like Rema would say. He says Mr. Peter's favorite currency. No, it's not really my favorite. It's that I needed to go understand why and how this currency plays out, which is the Great Britain pounds versus the Japanese yen. And so that currency was the currency that actually gave me the largest loss on a spot. If not more than $4,000 or $5,000 on a spot, on a trade I've classified that I won. But the market gave a huge reversal. But on that particular day, the JPY was, I can never forget, the JPY had only 1 bar. GBP had 4 bars. So the market was destined for buying. But the JPY took off. There was no news, nothing. JPY took off and just dragged everything down. But what if I stopped at the time I made the first profit? It wouldn't have happened, but I didn't stop. I thought, you know what? Since the market is still buying, let me pull my head. And exactly that particular day, exactly 5:15 on that particular day, the market took a huge reversal and almost wiped out the entire account. And so that is it. You need to know when to stop trading. And the last but not the least is keep trading in perspective. What it means is stay on the big picture when you're trading. What is the big picture? What is your why? That brings me to your why. What is your why? Why are you even trading? You trading to make money? Are you trading to have a particular lifestyle? Is losing the trade part of what you see yourself doing? Is it part of your system? Is it part of you as a trader? Winning the trade, is it just one step to a profitable? We just read all of these. So like it says in the last part here, which I will wrap up with, it says you are setting yourself up for failure if you expect to be a multimillionaire overnight, which is next week Tuesday. So you've already set yourself up for failure if you think that yes, because Rema has given you SMA strategy, you're already a millionaire in overnight. Just maybe this night, some of us want to take gold. You've already set yourself for failure. So, ladies and gentlemen, as I come to the end of it, I want to say in the last word, when you're committed to your commitment and stay focused, keep learning. Guys, together we will achieve more. Thank you, Mr. Harvis.
Thank you, Mr. Peter. And I want to say thank you once again to Mr. Rema, and also thank everyone who joined this meeting and stayed to the end. We'll keep coming up with this meeting from time to time as we get to learn new things. We'll also put them in recording and share them with the community, and want to see how we can help everyone in the community get back on their feet, get back on track, and recover, any money they may have lost in this space. But this time around, you're doing it yourself, okay? So this is Operation Do It Yourself, trade by yourself, learn the skill for yourself, understand it, and, go at your own pace. But the good thing about it is that at the end of the day, you'll be glad that you learned the skill. So this could just be one side also for you, even while you're still working or doing other things for yourself. But believe me, if you take this seriously, take this skill seriously, even on a conservative side, you can make for yourself at least between $300 to $500 every month. Okay? And what I mean by this is it doesn't mean you have to trade every day. You can trade on specific days or twice a week, but each of the time that you go into that trade, you will, be very sure of what you're doing, and, you come up, with good profits, and you make yourself between, $300 to $500 every month doing this on your own, and you keep growing from there. So thank you, everyone. Thanks for joining. We'll share the recording. I'm going to divide this recording into, I think, two parts. The parts that have to do with, the strategy, and then the question and answer, and the last part that Mr. Peter took. I'm also going to, do that separately so that we'll have, different sessions of it. So it will make it easier for people to watch and, understand. So thank you, everyone. Have a lovely night rest. See you guys in the live trading group tomorrow. Good night and bye-bye. Thank you, Mr. Rema. Thank you, Mr. Peter.
Thank you,
And
everyone.
thank you, everyone, for joining. Good night.
Thank you, boss.
Thank you, Rema. Thank you, everyone. Good night.